cash just keeps flowing into the coffers of the world's largest streaming service. Netflix raked in nearly $5 billion in revenue during the second quarter of this year, 26% more than a year earlier.
The EPS earnings and the revenue beat expectations, so they've got the funds behind them, and they're in a market that's expected to grow and grow and grow.
Yet its stock price has fallen sharply. Investors seem concerned about the slowing number of new users. The company lost 130,000 customers in the US during the second quarter, the first drop since the streaming service was launched in 2011. Globally, it added 2.7 million paying users, about half as many as projected earlier this year. CEO Reed Hastings says subscriptions have slowed in all regions, but the biggest loss is in markets where membership fees were raised back in January. Customers aren't giving up on streaming services. Many are simply switching to other providers. Hulu added twice as many users as Netflix in the last quarter of 2018, and the number of available choices is increasing. Apple and Walt Disney are launching their streaming services this year, and by next year, AT&T and Comcast will also be in the market.
Nobody alone is going to take down Netflix or Amazon Prime, but certainly all of these companies together and services together are threatening the market share and overall market dominance of any single player.
Netflix is hoping to pique customers' interest with more original content.
They've actually got some good shows coming up. I mean, Stranger Things is their big hit at the moment, so they've got a new season of that coming up. They've actually got a lot of big productions coming again, such as The Crown.
But producing new shows and movies is expensive, and it seems some investors are tuning out before the company's revenues take a hit. Mubin Nasir, TRT World.
For more on this now, Bob O'Donnell joins us from Foster City, California. He's president and chief analyst at the California-based tech research firm Technalysis Research. Welcome back to Money Talks, Bob. Now, is this just one bad quarter for Netflix, or are there perhaps worse things to come for the streaming service?
Well, I think in the short term, this is probably one bad quarter, and we may see them turn around, in fact, next quarter. But we do have to think about this longer term. I mean, remember that essentially Netflix really has driven this whole over-the-top streaming phenomenon that you've just been talking about in this package and that all these other companies are doing. So right now, Netflix is the name behind streaming. As streaming goes more mainstream and becomes a widely accepted part of how people consume their video all over the world, then things do get to be much more challenging. Essentially, then you move into a model that's frankly not much different, than say the music business. It's a hit-based business. You have to have hits, and that's hard to keep up with. Even if you have the money, there's no guarantee that every show that you produce is going to be a hit, is going to be popular. And as the choices become more widely available, that is across more networks, I do think that is certainly a long-term concern. So bottom line is, if we take a longer-term view of this, I think we will continue to see Netflix grow. I think their growth will slow, but I do think the competitive challenges are going to be enormous. And that ability to do great original shows all the time is going to be a challenge. By the way, for everybody, not just for Netflix. All of the independent video streaming services are going to have this challenge. That's why you have to look at something like a Disney. They have such a huge library of content that they can build on that the other firms don't have. AT&T can leverage Time Warner's library to some degree, but those are going to be the things to watch.
Okay, so how would you rate Netflix on that front then, in terms of its commitment to creating original content that will keep its viewers and grow its customer base?
Well, they're clearly committed to it. And they have a lot of money coming in to be able to drive that. So it's not that, just to be clear, it's not that they're not going to be pushing hard on that. I just think when we start to get to an era when everybody is streaming all the time, then it's a question of who's got the cool, hot show and who is going to be willing to subscribe to a service to get that show. The real challenge for all of these services is going to be maintaining their client base, because I think people are going to be able to switch very easily, and that's a challenge for all of them, including Netflix.
Okay, we'll see how Netflix goes in the next quarter. Bob O'Donnell, thank you again for your time.